Hello and welcome to another episode of Market Maker Mondays. I'm the Nomadic Trader. Thank you for watching this video. And in this video, what I'm going to cover in a bit more detail is what I see in between the lines of what ICT's already shared. So full disclosure, I have watched that. There's a lot of it that was already on my radar, but there's actually quite a bit that wasn't already with the concepts that he's teaching around the new levels. So I'm going to introduce that as well throughout the video. So hopefully you've already seen what he's shared. And like without further ado, what I want to do is bring you into the dollar index. So we've actually got the consequent encroachment of this daily wick here, which we are starting to reject here. So in terms of market structure, swing high, swing low, potential swing high here at the beginning of the week, which is great for us because if we are anticipating a bullish week, we're going to be expecting Monday, Tuesday, maybe Wednesday morning to offer us that low of the week. So that would actually put us in this region here, which is great. So we're going to come in and close some of this range here on the daily candle. And then the overall structure. So I'd already shared it in the previous video. So I'm going to zoom all the way out, but keep it on the daily if I can, which I can't. So I'll go up to the monthly. So this is what the monthly looks like. It's the 27th of February today. You can see that we've got this bullish engulfing candle. So we've actually got this leg A to B here. So this is the upper and lower boundary of this current dealing range on the monthly time frame. That's a huge macro view. We actually dip down into the discount area. We've taken the low here and also on the daily. We've also dipped into the BISI and the daily that's nested within the monthly. So this is a really key level, and the fact that we've had this strong projection on the monthly time frame now tells me that we do actually want to start approaching this level here, or at least moving in that direction. So that's the macro, and then on the weekly time frame we can see that we're actually traded above the consequent encroachment of this wick here, and now we are looking at these further objectives on the daily time frame. So back to the daily, that's giving you a bit of an insight. So what ICT is actually suggesting is we're going to come and trade into this daily SIBI and the, in fact, actually, let me just extend that over. I've just noticed that. So you've got this volume imbalance as well as the SIBI here. So at the moment on the dollar index, we're actually currently rejecting the consequent encroachment of this wick, with anticipation that at the beginning of the week, Monday, Tuesday into Wednesday, maybe a push. Obviously, you always need to just give it that buffer to come in and then to print the low of the week, which would basically give us the power of three on the weekly. So you got your open, your low, high, and then your close. So going from the dollar index to US 500, which is what I'm trading, we've actually come back as well into a discount here, which I find is interesting. So we've rejected this discount PD array, which is a daily BISI or just fair value gap if you want to, but I am going to start calling them BISI and SIBI. So we've got this this BISI here. We've also swept the lows below this low here, and then we're starting to reject that. So we're actually now back into a premium, and we're coming in to close in some of this range here. Now, at the moment, this really doesn't have a pullback. This is really just one daily run. So we've got all of this as resistance before we then come back up to rebalance this, which would be more of a complex pullback to then trade lower. So we're at the moment, because we've got this bullish move higher, we know that on the lower time frames, like the 1 hour, the 4 hour, the tide has turned. So we're currently in a bullish intraday trend or short-term trend, which is actually given us this pullback here. So if I go down to the 4 hour time frame, So we've only recently just broken this 4-hour swing high, but it looks better on the 1-hour time frame. So what we need to consider is how high do we have on the dollar index, or how much scope do we have, sorry. So we've already rejected this short-term low, which was also the beginning boundary of this 1-hour BISI. And we've actually come back down to reject this low here, which would actually be a, what's that one called? Breaker. So you've got this, this breaker basically, and then it's come back up to reject it. This is also mitigation block as well. And now we're starting to show movement still to the downside. This here is a daily key level. You've also got all of this support potentially. So the 15-minute time frame, we're looking at the trading session now. And you can see that at the moment, we could be putting in an opportunity for a reversal here into the later part of the session. If we continue to move lower, then we've got this 15-minute BISI here, which also puts us below this short-term low. And the middle of this actually lines up the consequent encroachment of the 15-minute wick lines up with the daily key level as well. So this would be a good opportunity to fully sweep these lows if we did want to go higher from there. We are including the time and price theory model. So at the moment, we are just in the middle of no man's land when it comes to price. This is actually mid-flow of the London session. I don't trade the London session, so I'm only really looking at trading here. Ideally, I'm looking for the run on liquidity, and then I'm looking for the market to show a nice clear indication of what it wants to do between here and here. So this is the 8:30 open, 8:30 news embargo lift. So if we've got news on the day, so today we do actually have at 8:30 Eastern Standard Time, we do actually have medium impact news. And then Tuesday we've got red news, Wednesday we've got red news, and also Friday we've got red news. We've also got the unemployment claims. So a really busy week for the high impact and medium impact news, which is great because that's obviously the driver for the market. So this could be, we could consolidate in this region because we've actually grabbed with a short stab here. We've actually grabbed the sell side liquidity. And what I always like to see is on the time frame that you observe a key low like this, we'll take the liquidity, but then we'll also do a Judas swing before we actually show signs of wanting to go higher. So that would be on each time frame. So that's something to look out for. So if you are watching the 15-minute time frame, and as soon as we start to reject it, that's great. And then we're going to look to move higher. But then what I like to see is then on that same time frame. So if I was trading the overall institutional order flow on the 15-minute time frame, I'd then want to see a Judas swing on the 15-minute time frame. So I wouldn't be looking at hopping down. If this is bearish, this is still bearish until I see confirmation on the 15-minute time frame. So I've had to actually move away from using a higher time frame to give me my key levels and then go to the lower time frame and then expecting that move to just completely run and undo the higher time frame, because the amount of losses that I've had for that isn't actually worth me trying to catch a home run. And then if we go back into the market flow, so we've had this short-term high taken, we've come back down. It's nice and simple market structure: higher high, higher low, higher high into this key level, and then potentially we're looking for a higher low here. So there's definitely scope to come lower into this overall. So if we are actually looking at trading a one shot, one kill, I wouldn't be looking at entering on Monday and seeing this as the low of the week personally, especially because we've got this daily key level, which is just slightly lower than that, which will actually put us further into this range. And then that would then look like coming back in to close this as the dollar index is at the high. So with a weaker dollar, we see a stronger, the rest of the marketplace basically. So I think this is pretty much, from what I'm seeing, I think this is pretty much filling in this range to give us what we actually want to see. We also need to consider that at the moment this is a daily swing low. So we've got a low, a lower low, and a higher low here at this key level. But then we've also got this here. So at the moment, on an intraday level, we've actually got the dealing range from this high to this low. Now, this low isn't confirmed because we've not actually traded lower than, this swing high isn't yet confirmed because we haven't actually seen the fourth candle move through it. But equally, this is the same for this. So this 1, 2, 3, and then it takes a fourth candle to then continue the move. And that is the confirmation of it. So in terms of the overall movement on the daily time frame, as a sort of speaking, do we actually want to move higher into this region to mitigate some of this inefficiency? It is a little bit too early to decide on that direction. So what I would say is, if you're trading today on Monday, the 27th of February, I would actually keep it it's shorter targets, just go for that 2 or 3 to 1 reward ratio, if that's actually that fits within your trading model. I'm now trying to just stick to a 3 to 1 reward profile, and I'm actually just holding out for that objective unless I have confirmation that the market wants to turn against me. And the reason being is just because of like my experience with trading these concepts. What I'd actually analysed on my winning and losing trades is I'm holding on to a losing position of 1% every time, and I'm always taking partials within that movement when the market goes in my favour. But the problem is, by the time I've actually taken partials off the table, once it actually reaches the full objective, I'm still only making 1 or 2%, like 2% at a stretch as well sometimes. So I'm really looking to take 2 to 3% fixed position full term target for my trading, just because I've found for me that's what works best. So when we're having a look at the 1 hour structure, you can see that we're starting to slow down at this SIBI. This would actually put us in the potential realms for a lower or micro time frame reversal, which is going to be your 5 minute and below. And that would actually give you a bearish trend on 5 minutes and below time frame on this 1 hour retracement, which puts us basically, we've got this fair value gap here. So this is actually impulsive, because when you look at this, this is struggling. Now we've actually had an impulsive move higher. We haven't yet reached the consequent encroachment for this 1 hour SIBI, which could be a really good indication, because if the market is heavy, meaning it wants to go lower, we don't want it to go that far up into this. So this is basically like a barometer, if you think of it that. If it literally just taps into it and then it rejects it, that means then, depending on how you view the market, could be more sellers coming into the market, could be that the algorithm doesn't want to price higher, whatever it is. The story behind it remains the same. So we're already starting to see a rejection of this wick here. What I would like to see is for this to have more indication. So we've actually got this imbalance here on the 1 hour time frame. So roles can reverse on these as well. So what we might see here is on the micro time frame, we're going to see a turnaround in direction, and then we could actually move lower to reject this level, or even spike down into this fair value gap and then come up to take the high. And then we could either come lower or we could just continue higher. So what I do is in moments like this where price isn't as single direction and it's not so obvious, we've got the overall draw on liquidity on the weekly time frame. We can see the movement at the moment is lower, although we do have this support. We've taken this and we've actually shown willingness to move lower. This is a really nice candle. We have actually rejected this level. ICT actually has given us confirmation that on the weekly time frame, this looks a lot nicer. So because of the strength of this dollar index weekly bullish candle, then we do actually want to trade higher here. So using this as confirmation gives us more indication that this definitely does want to trade lower. So this on its own might be a little bit on the fence because we've actually got this support level that we've actually rejected within discount. So then that's when you're obviously using your intermarket analysis to be able to give you that extra confirmation. So at the moment we're trading higher on the 1 hour time frame. We are starting to reject this level here, and we may even on a 15-minute time frame, let's have a look for 3 drives pattern. So we've got 1 push, 2 push, and you see how these candles, each time it pushes up, it comes back lower. I actually see this as the market's starting to build in short positions. So we could see a 3 drives pattern, which might actually put us up into that mean threshold or the consequent encroachment. Let's have a look at the market structure now. So in fact, actually, we've already got that 3 drives pattern on a 5-minute time frame. So for me, full confirmation for this to move to the downside would be to actually show a lower low, lower high here, and then full confirmation would actually be to trade below this. And then I would be looking to come down and to take the liquidity on these equal lows. And then my next objective would actually be the low from Asia as well. So there's a backup really, or an addition, a supporting idea, an introduction to what ICT has already spoken about. If you haven't watched it, definitely go and watch it. I don't trade Forex anymore, so I just watched the beginning bit. I skipped all the Forex and then I went straight through to the S&P. So at the moment, it looks like we are getting this 3 drives pattern, which looks nice in retail. Look at that ascending channel. I'm actually disappointed that I still see these things, but I guess, yeah, when you see them, at least you can then start to think in terms of what the retail trader might be seeing. So yeah, so we've got this would be, so if the market does actually decide that, so at the moment we've only come back down to fill in this, I would want to see a trade below this fair value gap on the 5-minute time frame to come back up to retest it. If we trade lower and then up to that, that would be ideal. And then have a look to trade lower, and then you could even do this to be safe. So from here to here, and you'd be looking at just trading this down to this. But of course, there's actually quite a bit of time between then and the news embargo lift, which is 3.5 hours. So just keep that in mind if you are looking at trading before the market open. Me personally, I'm going to let the market play out, and I'm going to come back down here at 8:30 EST, or that is 1:30 in the afternoon in London time. So hopefully that's been of some use for you. I've discussed some of the newer concepts that ICT is bringing into his trading now. If you've got any feedback or any suggestions or any support, please chuck it down below. I am looking at getting back into these videos, and also I'm working out what feature topics I could do. So if you do have any requests, please put all that down below in the comments. And until next week, Good luck, good trading, and I'll speak to you next time. Thanks. Bye.